segue onto Niger and stay with that, and also move you through other parts of Africa. So GOVIEX, again, continuing with the African story. There's my disclaimers, cautionary statements. We are an African-focused development company. That's what we do. We have two main projects. We have the Madaouela project, also in Niger, about 140 km north of Dassa, and we have the Matanga project down in Zambia. Both of these are permitted projects, working on getting their development sorted out. We've got one pure exploration play, which is the Falea project in Mali, but there's a lot of exploration on our existing projects. We stopped drilling effectively for exploration back in 2013 and are focused on turning the measured and indicated pounds into development pounds for construction. Africa is a great place to operate. I mean, Stephen touched on that already. Your ability to get permits is very quick. You're generally dealing with only one landowner all of the time. It's either the government or the tribal chiefs. So getting permits for surface rights, those kinds of things, building out stakes is a very easy, focused, targeted thing. We've just updated our ESIA for our Madaouela project. Literally, it's 1 week in a building where all stakeholders turn up together, make their recommendations, and the job is finished. So very straightforward. We are looking at one of the largest resources out there and continue to expand on that. I'll just point out this one, and we all know this, is that uranium spot price has moved very robustly. But for those who think this sector's finished, a long way to go. The equities have not even started to price in those higher uranium prices. In fact, we've seen the uranium equities falling back instead, which doesn't make any real sense. I won't go through that slide. We all know what that one, but I thought this slide was quite an interesting one, just highlighting the problem our industry has on the supply side. Our exploration budgets have collapsed completely as an industry. There is very little money really relatively being spent on pure exploration. We're starting to see new green shoots, particularly in the Athabascas, but in other jurisdictions, really very little going through. The bottom chart is interesting as well. It just highlights the risk of where we currently stand. So in 2022, 75% of all uranium that was consumed came from existing mines, and we mopped the rest up looking for inventory material that was out there. By WNA's number, 2030, existing mines will only account for 64% of everything produced. To meet the rest, we have to build new mines. Most of those are mines like myself and Dassa, etc., and new restarts. So they're relatively well understood. But by 2040, existing mines will only make up 20% of all demand coming through. We have an industry with a very strong growth rate, relying on new production to fill it, while older mines go into their death spirals. So, interesting position from a pricing point of view. We, as an exploration development side, are going to have to work very hard over the next 17 years just to make sure that this gets matched out. Madaouela, it is 10 kilometers south of Orano's mines. We are literally sharing license boundaries with Somaïr and Cominek. We're next to the town of Arlet. In fact, our base camp is actually in the town of Arlet. It's about 30 minutes drive from our Miriam deposit. Great infrastructure there. The road is there. There's the power line that comes all the way up from the Sonachar coal mine. Water's not a problem. We hit water 40 meters below the surface everywhere that we drill. In fact, we'll have to do a lot of dewatering to operate an underground mine. And there's a mining labor force. While Dassa is stealing all the underground operators, Somaïr is coming to the end of its life as well. And we're focused initially as an open pit mine, so it's a lot easier to train staff. But there's a lot of skilled people up there. There's close on 200,000 people living up in that area. Sandstone hosted very much. We've got a good relationship with the government. We maintain that relationship. And because they have a 20% stake with a 10% free carry as well, we continue to get support to develop. We, on the morning of the coup, had just received our last LOI from lenders to make sure we were sitting at $250 million of LOI coverage, with insurance coverage as well, potential to go forward. Nicely for myself, most of my lenders' LOIs are exactly the same as Stephen's, so he's doing all the hard work for me at the moment of making sure how the contracts will look, and then we will go into follow in on the next stage of that work going forward. This is a large resource. It starts as an open pit mine, then goes underground. We put out our feasibility study for this one at the end of 2022. Good cash flow, that's what the lenders liked about it. At $75, with the molybdenum price where it is now, we're at $331 million valuation on this project. So it's a robust project, very easy to do, no major complications. But what people I don't think get appreciated, and the silver lining in my view for what's happened, is people have started to realize we have a second project. This is the Matanga project. It is down in Zambia, next to Lake Kariba, so it's right next to Kariba Dam. 80% of our power would therefore be coming off hydropower. It's fully mine permitted. We're just updating the ESIA at the moment for the new design going forward. Really good infrastructure. We're right next to the border crossings into Zimbabwe and into Namibia. We're in a mining country, copper being its major play, almost 1 million tons of copper every year come out of Zambia, and they're looking to massively expand that as well. It is 5 deposits, 2 main deposits in the center, which will be mined as an open pit heap leaching operation. Then we have 3 separate ones that we mined as satellites, delivering ion exchange prill resin straight into the centralized one to produce. Like Madaouela, both of these projects will produce 2.5 million pounds per each. Madaouela will go on for 19 years without any additional access into the other pounds with exploration potential, which is very easy. Zambia at the moment is 12 years with the expansion forward. I can't unfortunately show you the PEA numbers because of the 43-101 rules. You're only allowed 1 technical report at any one time. It's a bit frustrating, but we did upgrade our resource here fairly substantially, up to 75% in M&I. We have just infilled a large chunk of that inferred last year and moved it up into M&I, which will go into the feasibility study. This project, while it's lower grade than you would see normally, it's much higher than Namibia, benefits from a number of aspects though. One, the rock is really soft. You can crush core with your foot, which means we don't have to mill. We're a heap leaching operation, so we only want to break our rock down to 1 inch in size anyway, so we're only crushing. To give you a sense of scale, Madaouela at 1 million tons per annum would have a power capacity of about 8 meg. This will process 4 million tons and will be under 6 meg of power. So in a country that has really cheap power, Zambian power comes in at about 7 or 8 cents a megawatt hour, so really cheap power. We are also looking at a very low acid consumption. If you look at Somaïr and Cominac, our next door neighbors, they consume about 100 to 120 kilograms of acid for every ton of rock that they process. At Madaouela, we got that down to 50 by going to a 2-stage tank leach. Zambia consumes less than 10 kg a ton. And in a country that is a massive exporter of sulfuric acid, because it all comes out of the copper belt as well. So a lot of work to go forward. We're looking at finishing off the feasibility study for this one in August, September, roughly. We had 123 capital under the PEA. Probably expect that to come in about 150, 160 is my rough guess at the moment. But at a $75 uranium price, you're coming up with about $350 to $400 million value. I think it's what David's got for it as well. So at our current market cap at $100 million US, we're trading at 1/3 our valuation for Matanga to a quarter. You get Madaouela for free, effectively, on us. So these are really robust projects. We're going to end up having to build 2 of them. ESG, as Stephen mentioned, it's a key component. And in fact, it is such a key component in our industry. The European utilities will not buy uranium from you unless you meet their ESG requirements. So we have to do it. But it's also part of running a proper business. Health, safety, environment, working with your communities is a very key component. We provide in Niger water, we provide schools, we provide clinics. In Zambia, we've been doing very similar things. In Zambia, we've had to take it 1 step further. The education levels where we operate in Zambia are very, very low. to the point that 80% of our adult population has no education in English, which is pretty surprising for an English-speaking country. So we have started an adult education program to get them ready for the jobs. We have 550 students at the moment, so when the school closes every day for the children, 550 adults turn up to get themselves up to grade 4. We're starting a trade school for them to start training them to be fitters and electricians, and we'll be bringing in big mining equipment simulator gear to start training them up, so that by the time our kit arrives, these people are going to have the skill sets that we need well in advance. We continue to put out our sustainability reports, and they're available through the Onion reporting system, but also available from our website. Strong shareholder base. Insiders are holding at about 11.4%. We recently raised money at the end of the last year. We raised about 11 US, so I'm sitting with enough money to get me through this year. We are starting to do some small groundwork in Niger, but we'll focus more on getting the debt financing going forward. Stephen was talking about how cheap he is relative to others. Well, we are even cheaper. We are seriously cheap. And as I say, you know, if Matanga on its loan was out there, this would be valued, and these guys have got them valued at 0.7. Most people, analysts, at 0.7 to NAV. So, you know, the company should be trading at much closer to $250, $300 million valuation on Matanga alone. As I say, you're getting Niger for free at the moment in the company. So, strong market out there. We've all seen that. We do have an experienced board. We've got people like Benoit Lassalle on there, Govin Friedland. There's a lady called Somerset Reto. She did the debt financing for Paladin in the last cycle, now runs a very successful cashew business out of West Africa. We've got a lot of exploration upside. We did stop all of our exploration drilling back in 2013, simply because we wanted to focus on the pounds that we had. Our mining permits are granted. We're moving forward on our debt financing. The next step is to continue with our offtake agreements, get that financing going, and get these projects going. The one point I'll make as well is that, you know, with the market changing, but more importantly on Matanga, I had a lot of conversations with Indaba. Matanga is going to be a really easy project to finance because it's in sub-Saharan Africa. So, thank you very much.